Liquidity, market structure, supply and demand, words that traders are familiar with but struggle to build it together into a consistently profitable strategy.
Everyone's big on mechanical trading. I think you've got to have a balance of both. If you're just sat there waiting on a shift in market structure and a pullback into extreme without understanding the intention of price, inducement, characteristics, 100% mechanical strategy is not always going to work. Otherwise, the people with top IQs in the world will be the best traders. Data shows otherwise.
Introducing Michael Bamber, a full-time funded trader, consistently making payouts with prop firms. In this episode, we explore strategy, psychology, money management, and everything it takes to be consistently profitable, not only with CFD, Forex prop firms, but actually transitioning towards futures prop firms and futures trading.
Traders will get to that point where intuition starts to kick in and kind of hesitate. I did the same thing. You get to that point where intuition starts to almost have a bigger voice inside of you to back yourself with conviction.
Where is that line of intuition and how do you use it?
Good question, actually. Daily bias is made up of three things. Market structure, are we bullish or bearish? Drawing liquidity to support price. And then understanding, have we tapped into a PD arrays? For example, decisional OB, price has respected that with clear momentum. At that point, you know where the draw is. If you can navigate that, clear daily bias.
I learned these things, I'm trying it out, it's not working, let me try and learn more. But then it can also feel like an endless chase. How does someone arrive to a point where it's like, okay, I probably know enough, learning more is no longer going to serve me, and what should I do instead?
Here's a quick exercise, just came to mind just off the top.
Ladies and gents, welcome back to another episode. I'm joined by Michael. We are both in the UK, kicking off a mini UK tour. And it seems we've been following each other for I don't know, maybe 7-6 years, a long time. And I've been observing from afar your evolution in your trading. And I think I want to talk through the journey. Each year you pivoted in certain senses. And I think that journey you followed, a lot of traders follow, where you find one source of education and then you pivot to another, you kind of strategy hop, and then it looks like you find your own way eventually. So let's talk through that, how you use social media to initially learn and what journey that took you on.
Yeah, so it feels like a lifetime ago now. Started in 2016. Went on a full journey. Started with, funny enough, a lot of people don't know this, but ICT. Then went kind of full circle over time. So started with that. I used to come home from college, learn on the bus, just try and maximize time. Then went through IP, then into Falcon. I think most people know me from Falcon. Stayed there for probably 2-3 years, up until 2020. Managed to go from full-time student, I guess, to then full-time trading. Realized the stresses that brought. Obviously doing YouTube as well at the same time, documenting the entire thing on that platform. Mm-hmm. And then went down a full rabbit hole of more knowledge, realized that that's not always the case. Figured out where I wanted to be. So I went from Falcon to price action, did a few courses as well, then into smart money, and then just kind of like formulated my own twist on things, using a lot of the ICT principles. Mm-hmm. So certain things like now, like power of three, daily cycle, higher time frame bias, still use that now to this day, just with my own kind of like twist on it as well, you know?
Do you think it's important to develop your own edge in that sense, or have your own twist and maybe combine schools of thoughts? Or when you approached a mentor, let's say, would you go all in and learn everything they have to say and then distill later, or would you always add in your
distill
thoughts?
Later. I think that's important. I think you want to be learning from people who are already there or in your position to then succeed. Mm-hmm. I have it in my group. There's someone called Mohammed. He's a spitting image of, like, if I asked him to do my markups, you'd think it was me. Mm-hmm. But the truth of the matter is, once you get to a certain stage, you need to also filter into your own intuition. Use that fluidity in your approach to almost give you your own sense on the market, you know? Yeah. So it's a good thing up until a certain point. Then I think you need to trust yourself. And that's where I think the real growth happens. That's when you're really going to scale. And that's where certain lessons will come that never came before. Mm.
It's an interesting thing you just touched on, which is you can have a mechanical strategy, or you can have a mentor who teaches you a strategy. You look to copy it. But when you have a community, you see that the traders in the community all have a little bit of difference. It's never a carbon copy and you have 50 traders that are same as the mentor. And you could see that as bad teaching, or you could see that in trading, you will always have an individuality. And I think that can be your psychology. And I want to hear your thoughts on it, where certain people they want the quick win. Certain people are happy to sit and draw down. That's the swing scalp kind of paradigm. But what shaped your strategy tied to your personality, or what changes did you see as years went on?
You go through an experimentation phase. I went through day trading, swing trading. I kind of find a mixture of both now, to be honest. I love day trading, but certain pairs have their own characteristics. EU, for example, I like to day trade in and out, usually within a day. Something like pound yen, I love pound yen. It's a little bit more volatile. I know the characteristics very well. Traded it for a good few years now. The characteristic of that pair is more of a swing pair. So when I know where price is going with a lot of conviction, I then just play it. There was a trade that I took, I think it was probably 2-3 weeks ago now, maybe even 4 weeks, because I knew the conviction of we were going to get to that psychological level of a 200, played it for a swing trade, and ended up taking 5, 6, 7 trades along that swing to then just maximize on the move. So with pairs like that, I really love it. And if you're holding a long on pound yen, you get positive swap anyway. So it's like really getting paid to hold the trade.
I've heard traders talk about this, never as a discussion, but something I've observed, just being as a host, where you have the category of traders which will be, this is my strategy, this is how I describe it, this is how I trade it, and these are the pairs I trade. So you're putting your strategy to the pairs. I've also had traders that will be like, there are certain strategies for certain times of the year when you bring in seasonality or trend trading. If I'm in a trending market, these confluences. If I'm in a consolidating market, I might turn into scalping. So they modify their approach based on the pair that they're trading or the market cycle or phase conditions that they're in. It seems like you're considering both of these things where you have different strategies, let's call it, based on what you're trading. Would the core principles be the same? The entry and the reason for the trade and the exit is different, or is there actually different mechanics to each pair that you're trading?
Most of it's the same.
Okay.
I could pick up any pair and probably trade it with the same entry model, but it's just understanding the characteristics and the tendencies of that pair. We talked about snooker before. It's almost like picking up a different snooker cue. Each wood throws the ball differently. So same with the characteristics of a pair. So GG, I'm a little bit more aggressive with the entries because if we get a flush down, for example, into a POI or a liquidity point, we're not always going to get the external shift in market structure to then move. We'll get a clear sell-off and price will buy back very quick. So I need to be in. Whereas on euro dollar,
it gives you the entry.
It gives you the entry. So you need to formulate it based on the pair. I also trade futures as well now. So that's a completely different ballgame, different market, very accurate, but that's based on time. So there's so many different factors based on the pair and the asset class you trade in. But I could quite easily pick up gold and trade that. I could pick up maybe BTC and probably trade that. You just need a bit of adjustment period. But I do believe knowing the pair like the back of your hand is like an edge within an edge.
I agree.
I love it.
There was a couple of tweets made by, I saw Umar tweet about it and it went kind of viral. I think TG also tweeted about it, kind of went viral. This whole idea of if you're new to trading, don't get into Forex, don't get into the CFD space. Get into futures or stocks or options. And it was kind of like in CFDs, you have the dodgy brokers, the dodgy gurus, and harder situation to trade in. As someone who's dabbled in both realms of futures and Forex, what is your observation?
Pros and cons to both. If I'd have known about futures earlier, would have taken that path, to be honest.
Okay.
The Forex side, I love pound yen. I love certain pairs. I think when you really get to grips with the manipulation cycles and how they play, you can play them very well. And you can swing trade a lot of these pairs if you want to. So FX market presents a lot of pros, but futures comes directly from the CME. There's no broker, there's no differences in broker. It's all from the same exchange. So same data feed. So it's a lot more accurate. And you can see the aspects of time, then price come into effect a lot more as well.
Interesting. Okay.
So time is important on FX, but when you step into the futures market, it's like a layer within a layer. You need to really pay attention to time.
Let's take a moment to talk about a partner of the show, a leading prop firm that is FundedNext. And it's important for me to listen to our community to see who are you working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale and affordable prices. And FundedNext has ticked all of those boxes, not only being a top 3 prop firm in the industry, but also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor, an important guarantee that they have is that if you do not receive your payout within 24 hours, they will gift you an additional $1,000 to your payout just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, FundedNext, check out the link in the description or use the code TOT. Let's spend some time on this topic. For time windows, especially euro dollar that we're both trading, I wouldn't say it's like clockwork. I would say that there is a window of increased opportunity or increased volume volatility that usually leads to more meaningful moves. So I know that if I'm taking a trade in the middle of Asia range, it's unlikely to be the main move of the day. It's more likely to consolidate or come back to my entry. But if I'm getting around the London Open, I know I'm in the right time, but I'll usually give myself on the hour that I trade plus or minus, let's say 15, because it's not precise. There's not a science. Is that something a bit more specific in futures? Very
specific. I will trade for a half an hour window.
Oh.
Two sides of that. So 9:45, 10:15 in New York time, then 10:45, 11:15. If nothing presents within that hour, I'm done. But it's based on the characteristics of the daily cycle up until that point, and then what happens to the market after 9:30 market open. So if you've got, it all comes down to the daily bias. I'm a big believer in simplifying things, not overcomplicating too many things. But if you've got a bullish daily bias, H1 order flow is bullish, price is respecting certain areas, and it's holding price, I'm then not going to be thrown off by a bearish move. If we open up 9:30, we sweep the highs and start selling off, I'm waiting. I'm not trying to jump into the market. Wait for that higher time frame narrative to formulate, and then I'm in. And it's the same.
As a result, you'll always be a continuation trader.
Yeah, based on the higher time frame, always has more weight. I think people try and ping pong the market too much, get in and out, which obviously you can do, you can master. But for me, pro trend has always been a fuel for my results. So for me, it was always 80-20 principle.
Yes.
What's the 20% of things that equate into 80% of those results? For me, it's pro trend. It's very easy to teach that as well and then apply that. And I love it because you've got that weight, you've got that gravity pull on price. If you know there's a clear draw on liquidity above and price has high conviction of getting there, you're going to back yourself to then play that. Then it's just a mental game of holding or being able to take multiple entries up until that draw. So that's a whole different ball game in itself. But conviction in trading is key.
You mentioned daily bias, and I think for everyone, it's a good starting point. So if I can predict where price is likely to go for the rest of the day or the upcoming day, it stops you from at least being offside. Maybe you don't get the entry wrong or something, but at least you're trading in the right direction. So it's a pretty crucial foundation. So if you can walk me through the building blocks of how do you find the daily bias, and then there will be scenarios where if you're inside a point of interest, if you're in no man's land, what is your framework?
Yeah, for me, it's very simple. So daily bias is made up of three things. Market structure. Are we bullish or bearish? Are we forming higher highs, higher lows? Determines market structure. Draw on liquidity to support price. So if we're in a bullish market, forming higher highs, higher lows, where's the draw on liquidity that I'm targeting? And then understanding, have we tapped into a PD array? For example, decisional OB, price has respected that with clear momentum. At that point, you know where the draw is. Then it's just allowing that substructure leg to take effect. And then that's where it's another layer once again. But if you can navigate that, clear daily bias.
And you'll be doing this on, I guess, a 1 hour or M15?
So daily bias for me is on the daily chart.
Okay.
So formulate that. Then what I want is that connection on the 1 hour as well. Sometimes there will be a disconnect. Sometimes the 1 hour will lag, but it will usually catch up to the daily. Sometimes the 1 hour will be in front of the daily, but you just need that daily to, correct itself. So for me, it's daily bias, H1 order flow, then lower time frame for execution. If all are aligned, perfect. And I've got 2 or 3 daily cycles that I trade based on the currency pair again. So something like euro dollar, typical daily cycle, Asian session, low, high sweeps, whereas something like pound yen quite often respects Asia.
Interesting. Okay.
Because it's a pound yen pair. So in yen, price expands. So if you can recognize the low of the day has already been formed in Asia, London then becomes the continuation. Because the power of 3 then essentially the time distortion takes effect. Manipulation takes effect in Asia. You then play the continuation in London. So it becomes an edge to then know the tendencies of the pair.
It makes sense because then you're trading in the flow of what happened in Asia. Just if the low is in, which you can predict, which you cannot do in a euro dollar in the same way. I want to discuss this idea of you're doing your daily bias starting on the daily time frame. So you're looking at the daily trend and you'll look for trades in alignment, but you might have a daily demand and prices up here, and it might spend 2 weeks retracing down. Would that be not for you, right? And you wait for it to arrive to a demand area to then look to buy, or would you sell along the way in that retracement portion?
I'm happy to sell.
Okay,
Just understanding that you're in the pullback phase on the daily. You know, the market's not going to move in one direction, but as soon as we start showing signs of topping out and we start to show those characteristics, shifting market structure internally, the 1 hour is now aligned because order flows changed to bearish. So you understand we're in a daily pullback, but can I still play it? For sure. And then execution on the lower time frames becomes simple. And once you've got the narrative in play with conviction, it's just timing after that. And then you formulate it into time efficiency in the markets, you know, London session, trade an hour, 2 max, overlap, I'm good. Low volume, I'll go hit the gym, I'll go do other things, go be productive with my other businesses. And then New York, come back. New York tends to be futures. I like trading pound yen in the morning. And then I like trading futures in the afternoon.
Oh, so it's Forex. Okay, got it. Okay.
So it makes it very simple.
Talk to me about what is a point of interest for you? And because the market structure read, trend read is heavily connected to points of interest. And those are the zones you're looking to capitalize on. So how would you find a point of interest? And more importantly, then how would you refine it to find an optimal zone?
Good question, actually. I don't refine it too much. I stick to the 1 hour chart for 1 hour POIs. So let's say we're on the 1 hour. I focus on current price. A lot of people are focused on what happened in 1959 and all that stuff. I'm focused on current price. So if we have a shift in market structure externally and we're showcasing that intention to back up aggression in the markets, bigger money's now stepped in, order flows potentially change into bullish. So then I look for pullback into basically 3 key areas. Decisional order block, which is basically the range, the OB that causes the break in structure. Yes. Then the extreme at the origin of the move, because there's going to be a lot of orders there as well. And then if price doesn't pull back, if we're in a buy leg, a sell side liquidity grab of previous session low, usually previous session low, to then take price higher. And then you factor in pair characteristics again. You know, pound yen doesn't always pull back. So it's understanding, okay, likely to get a liquidity entry on pound yen, euro dollar, likely to pull back into the POI. And we see now how accurate these things are time and time and time again. On FX, that's the drill. On futures, bring in a lot more fair value gaps.
Oh, cool. Talk to me about that. Because I've been told, Waqar, you're doing great in Forex. If you went to futures, you'd crush. And it seems like in the statement of just convert what you're doing, it would translate. But in my head, it's always been a resistance of, I don't know if I have to go back to the basics and build an edge and carve out everything that I've spent a decade now doing. So I'm always careful to transition.
It is a completely different market. There's a lot more people that have a lot more knowledge than me in futures. I recognize that. My knowledge is mainly in FX. So I'm still learning a lot as we speak. I'm open, teachable to learning more. But for the most part, it's still transferable. I'm just shifting certain things. So instead of an OB that I'm waiting for a pullback into, I'm seeing how price is respecting a fair value gap. And let's say we're holding above that fair value gap and my daily bias is bullish. H1 order flow is bullish. Weekly cycle is holding bullish. We've formed low of the week on Tuesday, let's say. I'm then looking for longs. I'm not going to be thrown off by short-term shorts. So I may get 2, 3, 4 trades a week in that 1-2 hours. And for me, the results have been solid so far. Like 7 trades, I ended up passing 400k apex.
Okay,
so I've got
cool.
some funding behind me now, trading it on personal as well. So it's just a factor of scaling it. I've only been trading it 4 or 5 months.
Do you believe, because I think part of the reason that those tweets went viral of the futures FX kind of debate, and the leading argument being that the $1 million payouts that I've had a few guests on the show that have achieved, you only see these huge numbers in the future side. Now, I don't know if that's a strategy relation or reason, or if it's the way that the funding environment works, or if it's just the ability to access more capital, which is usually you can scale a lot larger in the future side. What would you attribute that to?
I think the scale is interesting. You know, you got Apex, for example, or Top Step. It's a subscription-based fee. So you get a 50k account, you can stack 20 with Apex. It's very affordable for a lot of people. And then as soon as you pass that safety net phase, I'm like probably 1 trade away from that, passing that safety net phase now and start getting payouts on it. You can scale quite aggressively at that point. You don't need to factor in unrealized losses as much. Whereas in that safety net, I need to be a bit more diligent with trades that I'm taking. But, you know, you can look at FTMO and, you know, a lot of people are doing very well in FX as well. So sides of both. But I do see a lot of success coming out of futures for sure. You break down a lot of successful people are doing, like JCap and other people like that, there's a roadmap to where they are. I think it's a very good vehicle. And I think my knowledge of FX helps a lot in futures.
I think a lot of these guys that are crushing it in the future space, they all started off in Forex. And I think because FTMO closed the US and then a lot of FX prop firms did the same. I think FTMO has reopened to the US, but I think they were forced to go towards futures and then found success and then probably won't look back. But who's to know that did that foundation and years in the Forex space contribute or not contribute? I'll save that for when I have a guest like that. But I want to come back to this idea of when you have your daily bias, you're looking at your points of interest, and let's say you found a 1 hour extreme. Have you noticed in your 9 years now of trading a transition? Because what I've seemed to have found is 5 years ago, a market structure demand area, an extreme, would be like always respected. Like it would just be a very clear probability you would see. Whereas now it's less frequent, whether it just disrespects the level or what I'm more observing is wicks out the level, stop loss on, let's call it, or I call it an inducement. Is this something you've observed or had to adapt towards?
Yeah, 100%. There's a lot of traps in the market, especially in FX. I think back in 2020, 2021, there's a lot of people waiting on those extremes to be mitigated. Now, not so much. Not so much. You know, styles change, markets change, etc. But I think it's a lot of the time down to that next layer. If you're just sat there waiting on a shift in market structure and a pullback into extreme without understanding the intention of price, inducement, characteristics, you might as well just scope a long out or a short and just press buy or sell. You need to understand why that's important. There's certain characteristics, like I say, on euro dollar, it will often pull back into the extreme a lot more than it does on pound yen. But once that intention steps in, you need to be able to be a bit more flexible to then enter the market. You know, everyone's big on mechanical trading. I think you've got to have a balance of both, you know. It's the way everything works. Same with the brain. You've got that masculine side, the logic,
the animal side,
mechanical. Then you've got the feminine side, which is the fluidity. Being able to transition both and manage both is key. You know, 100% mechanical strategy is not always going to work. Otherwise, the people with the top IQs in the world will be the best traders. The data shows otherwise.
That's
Whereas
true.
if you can flow with it and develop that sixth sense, you know, it's talked about quite a lot in Think and Grow Rich as well. That sixth sense is important in the markets. You learn to flow. You learn to back yourself. You learn to have that conviction on certain areas because you've been right so many times. How could you not?
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them and the thousands and thousands of viewers, you guys, that have been working with them through the discount codes of Titans of Tomorrow, it's clear for me to see why they are a top-ranked prop firm in the industry. They have also reached a monumental milestone of $100 million in payouts. And with the multiple step plans and the multiple package types they have, there's going to be an option catered specifically for what you're looking for. So you can buy an evaluation account catered to your needs at the most competitive prices, and with our discount code TOT for Titans of Tomorrow, you're able to get the most unbeatable, unmatched prices in the industry with a leading trusted prop firm. And with that being said, let's get back to the episode.
This is an interesting topic. I want to pair it to what you were mentioning in Snooker, where because you played at a decently high level. I was just curious to know, because whenever I've played Snooker randomly, I'm always trying to figure out the maths. I'm like, okay, if I hit it on the wall, that's the angle it's coming in, so I needed to hit that angle to try and get it in. And my maths never works out and I never get it in. But the point here being that I'm trying to apply scientific or logical approaches. And then you were mentioning how it's more of a sixth sense. You're not actively thinking, I need to calculate this angle. You kind of just do. And this is an interesting observation, because in the markets, I see that a lot. And people saying, I took this trade because of my intuition. So this is a very interesting statement, because what is intuition? In a sporting scenario or in a snooker scenario, it's reps that you've put in that have now become ingrained as a neural pathway, or something that you can do, what's it called, subconscious competence. It's something that you've done so many times you don't have to think about, like walking, or like as I'm talking, I'm moving my hands, I'm not actively thinking. Is this something you can apply in trading, or is people usually utilizing this as a cope, where I took this trade because of intuition, I don't know why, I can't explain it. Maybe it was a YOLO trade that you just you don't know how to explain it, but it just played out. Where is that line of intuition, and how do you use it as a tool?
Yeah, you need the mechanical side. You need a model. Once you've got the model, experience then brings in fluidity. with that experience, you can't say it's intuition. You know, I could slap a buy on gold, it's intuition. You can't put it down to that. There's no fundamentals there. But once you reach a certain stage, there's a tipping point in your trading. You've relied on mechanical for so long, you've got that model, you know it like the back of your hand, like driving. But how often do you get in the car or drive 45 minutes and not even know how you ended up at that destination? All the time. So that fluidity takes over. I think it's a really interesting debate as well, because traders will get to that point where intuition starts to kick in and kind of hesitate. I did the same thing. You know, you get to that point where intuition starts to almost have a bigger voice inside of you to back yourself with conviction. Doesn't mean that you're changing anything. It just means that you know when to go defense, when to go offense. Big believer in that as well. You come into a new month, start defense, build up a bit of a cash buffer first. Then you can move into being offensive once you've got the skill set. And then that takes a 5% month into a 10, 15, 20, if you can do it in the right sense. So it's a really interesting debate. But I think once that voice starts to come in, if you're sat on the right experience and knowledge, you can execute that. But I wouldn't just wing it and, you know, someone's come into the market 3 months and they want to use intuition.
Yeah, I think it's this idea of earning it. You have to earn your intuition, or who has the right to deploy intuition. Somebody that has 3 months of market experience doesn't have the correct feedback loops and exposure to then call intuition. You were mentioning here now how applying defense, offense, or let's say characteristics around risk, depending on factors. It could be psychological factors, it could be a new month factor, it could be am I going through a winning or losing period. But how are you managing a risk and position sizing paired with conviction in a trade?
Risk stays the same for me.
Okay.
Risk stays the same for me. The focus coming into a new month, a bit more subconscious these days, is build the buffer. So I'm more likely, if a trade is running 4 or 5%, to pay myself and not just swing for the fences to 8% in the first go. You know, back that, you're up 20% for the month, then it's a different ballgame. You can take a few more risks, because if you're sat on 9% for the month, you take a 1% loss or 2% loss, it doesn't really impact you. You're still finished on 8%. You then do that at break even, changes the polarity of the month. So you need to understand, once again, bringing in time, when to do certain things. But if you can navigate that with some degree of methodology, can't remember the word. If you can do that,
I know it.
Then you're good. But you know, it takes experience to know that as well.
Just talking through a few things in your strategy here, I'm connecting the dots of what is important for you. But I see a lot of people that have confirmations. I'm talking about traders that are frustrated or confused. They'll watch a lot of content. They'll take in all these pieces of information. They'll be like, okay, daily bias, I know how to do that. Points of interest, I know how to do that. I know how to find traps. I know how to the key time windows. I know lower time frame confirmation. So I got all the building blocks, but I never seem to put it together in the right way, and it just leaves me loss after loss, even though all the boxes were ticked off. So this kind of brings me into this idea of, okay, is there a hierarchy of, okay, certain things are non-negotiable, they always have to be there. Other things they're good to have, but they're not a mandatory requirement. Do you have any form of hierarchy, and what would be an A+ versus a end of the month trade?
Yeah, for me, as we talked about before, like daily bias has got to be on side. H1 order flow has got to be on side, basically pro trend. Once that's in place, that's when timing comes into the mix. So daily cycle, have we formed the low of the day in Asia, London? Can I play off the back of that? That's the hierarchy of time, because you're factoring in then time plus price, and then you can scope out a potential entry.
So this would actually be a non-negotiable to find the low of the day with time or something.
100%. I'm not entering in overlap. I'm not entering, you know, before London, because that's my time. I'm good. I've had those days where, you know, I've had an office and been trading all day. You know, identified myself as a full-time trader, and then you almost feel obliged to trade all the time. Yeah. Truth of the matter is, the markets aren't like that. I'd rather be efficient with my timing, because how you do one thing is how you do everything. I'd rather be a master at the small things to then be a master at the bigger things. Time efficiency is key. So short for London, trade. If there's nothing there, I'm good. I'll go do something else. I'll go focus on Envision. I'll go film a YouTube video. And then overlap, that's my period. That's low volume. I'm not trying to enter the market. New York, come back, dial in, lock in for an hour or two, good to go. But the negotiables are things like SMT. On futures, very important. On FX, I'll still pay attention, but I can take it or leave it. With GJ, I like to pair that with JPY basket, inverse correlation, very good.
The index. Okay, interesting.
That's good. Also paying attention to things like euro yen, dollar yen, the strength of the pound with the euro pound.
Just
Pay
looking for
attention to-
divergences.
yeah, but that's
Okay.
the next layer. Do you need that to be consistent? No, you don't. Can you add that extra layer if you want to get towards mastery? Of course. So we bring that into Envision quite a lot. But I like GJ with JPY basket, and then EU, you've got GU and DXY. I think you use the same. So
We mentioned or touched upon the idea of finding the low of day, for example, an Asia sweep or a previous session sweep. Would you ascribe this to traps, or is this something else? How are you envisioning the word trap versus session sweeps?
in terms of if we're taking euro dollar or
Let's say in the euro dollar, but I mean in the more sense of what is going on behind the scenes is a session sweep, because you can also see it as just lower lows, or you could see it as a sweep, or are you seeing this? Okay, the reason this swept a session low was because maybe it was a level of support and we took out the support and resistance traders. Are you seeing it more as traps and manipulations, or are you just seeing it as a tendency, an observation?
Depends on what we're talking about. Like if we're talking euro dollar, then I want to see intention. Usually when it's backed by intention plus time, let's say we've come into London Open, 8 a.m. I want to be watching how the hourly candle is forming. If we're starting to open, let's say the opening price of the hour or the 4 hour, I want to see a downside wick if I'm looking for upside pressure, power of 3, right? Then if we back that with intent, we've got inducement, nice corrected pullback. I've got everything in place at that point to succeed. If I take it out of hours and let's say the low forms and I think it's a low today at 6 a.m., it's in Asia, that can easily be swept. Or, 7 a.m.
So it's actually back to time of when the probable portion is going to happen.
Yeah, so if it happens after 7:30, I'm good to go. And then I want the entry after 8 a.m. So I want that London Open sweep, that manipulation to take place, call the low of the day. My job as a trader is to get involved in that daily wick. If we've got the opening price in the daily, we've had nice corrective Asia, we've pulled down into a POI, liquidity sweep. My job is to get involved in that wick and capture the daily move. And if it's then pound yen, then I'll summarize and see if I want to hold it, see if I want to close it. Sometimes sells, if you take them for a long period of time, aren't worth taking on GJ, negative swaps. And then NASDAQ, I tend to just be in and out in a day.
So talking through kind of your strategy now, I can visualize exactly what you're describing, and I've seen a lot of similarities in your approach with a lot of the guests of the show. Even myself, I think there's quite an overlap. What changed this time round, whether we call it SMC, ICT, whatever your current form of trading is, versus your initial run back in the day, I guess back in 2016 when you gave ICT a go? What didn't you like, or what did you misunderstand that made you leave and then, I guess, full circle back to this point?
I guess I didn't know how to use the concepts well. I was 19. 19 years old, coming to the markets, never had that impression that I was going to make it in a year, 2 years. I thought it would take some time. So I was open to that, but I was just given, this basically free group. There was a few pieces of content. It wasn't everything. I think this was before ICT became huge on YouTube. So I went through a few videos, but I started to understand a few things, but then didn't really know how to apply it. And because I never had that mentor very early on to show me, okay, this is what you're looking for, this is what you do, here's how to piece it together, I was shooting in the dark. Coming into that now, of course, different ball game. A lot more concepts have come out, a lot more efficient ways of trading. Even ICT, a lot more in depth about how he does things and stuff like that. So it's easily applicable. Whereas back then, it's almost like you're a mad scientist in a lab, trying to figure things out. And, do I use OTE? Do I use swing points? What time frame do I use? I wasn't exposed to that information. So although I had videos, there wasn't that many videos at the same time. So I tried to leverage it and then, looked up to the people who I thought were in a good position, asked them, where you're learning from, where have you learned how to trade, and then kind of got into that place.
Well, when I first started seeing things back in the day, it seemed like you were more hanging around on the higher time frames and more just higher time frame trends is what I was observing from your chart work. Now it seems like you're much more on the lower time frame and looking for sweeps and this kind of stuff. What caused this transition, and do you see, because I think at both points you were profitable, so do you see that one is better than the other, or is it more of a personality link? What caused that change despite this was working, let me move away from it still?
I'm glad I changed. I'm glad for the way that I trade now. It's breeded pretty much everything. But back then, again, it's down to inexperience. I went through a period of having my first 6 to 8 months of consistency with that style. It went really well. And then obviously with COVID happening, the market's changed like overnight. So with that, I had like 4 months of drawdown and just basically freaked out because I was like 20 years old at the time. I was full-time, it was stressful. So at that point, there's a lot hanging on my trading. So a lot of pressure, you know, and then that caused me, okay, what am I missing? What do I need to focus on? Whereas reality is, if I had just stuck with it, it would have been fine in that phase of drawdown, just easily come out of it. But everything for a reason. I'm here where I am because of the style that, you know, breed it into. I learned a lot that knowledge isn't always the answer. You need to sometimes come full circle. And it's about doing things very well. You know, I've seen people, even to this day, you know, go in search of more knowledge. They'll do ICT and study every little single thing and different courses, and they'll know all the knowledge in the world, but they're still not profitable. So it's like you need to almost find a sweet spot as well. As much as I'm, you know, key on studying and do it very well, do it once so you never have to do it again, you also need to back yourself at some point in time and say, you know what, I know enough now, I'm going to continue learning, but let me just focus on this foundation. And that's what I did like 3, 4, 5 years ago.
It's interesting because what you're describing is a pain point that most experience, which is I learned these things, I'm trying it out, it's not working, let me try and learn more. So you kind of try and fix your losses or lack of profitability through learning more, but then it can also feel like an endless chase. So how does someone arrive to a point where it's like, okay, I probably know enough, but learning more is no longer going to serve me, and what should I do instead?
Here's a quick exercise, just came to mind just off the top. Go on Twitter, see how many people that have half the skill set as you that are making double the amount of money, and let that sit in effect. Still do that to this day, you know? So it's like you don't need all the knowledge in the world. You need conviction, you need a good mind, you need to be able to execute it very well. And a lot of it is in the mind, being around the right people, you know, stretching your belief system, stretching the mind. That is the most important aspect of trading. You know, I've been on the roller coaster with that.
Yeah, it's interesting. I speak to the hedge fund guys or the New York Stock Exchange guys, and we'll be talking about technicals, and it feels to me like they're still in the 90s. It's like, are you really just doing an RSI and maybe a support level? And then we, as the retail traders, we're trying to figure out every single impulse on every single M1 push. Yeah, these are the guys making the big money. Now, there's probably layers to that of why they're able to execute with primitive technicals and still get away with it. But the point is still there that you don't need to know everything, because everything that we speak about on these podcasts, they have no idea what's going on. They're completely oblivious to it, and they're managing billions of dollars. So there is merit in that. I want to tie in the conversation towards, obviously we spoke off camera and a bit on camera about your snooker career, pre-trading. And I want to see the overlaps that could exist, specifically when it comes to the psychology portion, because it's performance and you got to manage emotions, especially because if your hands start shaking or you tense up, it's gonna mess up your shot. So just the ability from a young age to control your emotions or be stoic, and has that translated into trading, or was it still a different beast when you got to the markets?
A lot of transitions came from snooker as well. I was, you know, quite benefited of the fact that my mum kept me off the streets growing up. I was always back and forth between snooker, fishing, tennis. Me and my brother used to do all three, and, you know, we were kind of kept off the streets. So I'm grateful for that. It taught me a lot about work. It taught me a lot about, you know, the action phase of trading, you know, putting in the work to then get results. So that part was very good. And then playing things like money matches, you know, going in the club and you'd see some ex-pro and then kind of test your ability. Okay, like I'll play you for 50 quid or like 150 quid. Okay, see how you get along. And that pressure, how did you then transpire? So that side of psychology definitely helped in trading. But once again, I was still a young kid, you know. What really helped is the mindset of being delusional. In the respect that me being 16 thinking I can become a professional snooker player, me being 19 think I can quit my 9 to 5, you know, and be a full-time trader, travel the world and live life on my terms, you have to be delusional. You can't be so caught up in this little like mindset box based on your environment that, you know, I can only make a certain amount of income. I can only make 50K a year because my mum and dad have made 50K. You really have to like learn to stretch yourself. And you have to have conviction. Like there's been times in my journey where I don't know the next step. I almost feel like a guinea pig. But I never once doubted the fact that I would not be successful. Always knew I'd be successful.
A trait I've observed in a lot of successful people, if I was to ask myself when I was like 15, what does a successful person look like in their late 20s? I would probably given a list of things and none of them seemed to be true. Up in that list would have been like, oh, they have to be super intelligent and then probably like, crazy talents. And these are the reason that they're millionaires. And now being in proximity to a lot, number one thing that jumps out has been like, they're actually the most regular people. And the word you just said of delusionally optimistic, to the point where somebody that was more analytical, they will analysis paralysis themselves into not doing anything. And the highest of IQ people are the ones that study the most or the most academic. They don't make for the best traders, neither the best entrepreneurs. They end up being the best employees and serving towards someone else's dream. And you got to be a little bit of a nonconformist to take a path that was put in front of you by your parents or your loved ones and say, I'm actually going to take my own independent route and not know where it's going to go, but I know it's going to work out. This is a trait I see in a lot of traders, actually. Every trader that ended up even considering trading, they have these things inside of them. And I think it's harnessing it to get the full potential. And when it gets a bit hard, the family pressure, the friends pressure, just not caving in through that. Did you have a portion in your career where the friends were laughing or didn't understand, especially maybe when you turn the camera on for YouTube content, or the family, because I guess they were trying to get you into or supporting you in your dream of professional snooker, to then say, I'm going to take this path? Did that come with any resistance?
Always had it. Still do to some degree.
Interesting.
You just have to navigate, okay, certain friends will be for certain purposes. Even now, like I'm not going to go around certain friends and talk about stretching my mindset or identity shifts or belief systems growing. It's not worth it because they're just going to give me their limiting beliefs. So I have to kind of protect my energy and understand around those people. It's not worth sending those kind of vibes. Around other people, open-minded, talk all day about this stuff. Okay, we've just done this, they've just done something, we push each other. It becomes that audit between all of us to really just grow to that next level. So even to this day, like I'm very understanding of what group of friends serve a different purpose. It's not to say don't shut them off. I've done it before, especially out of high school. Shut off a lot of friends coming into trading. Is it always the answer now? No. I'll go out and go to the restaurant with certain friends. Then I'll just focus on trading with other aspects of friends.
How important has it been to have friends that you could have these kind of conversations or who would relate to you?
Is the most important thing. You can be delusional yourself, but if you're the only one fighting for a mission when everyone around you doesn't believe that it's available, it's so tough. If you're a millionaire, but then everyone around you is broken, doesn't believe trading's even going to be a thing, you're on your own game. Suddenly you then up the standards of your overall group, and that's important to me now as well. Everyone around me is operating at a high level. I expect my team to be sharp. We just come back from Marbella Mastermind, 3 days, 15 traders from around the world. That experience taught me a lot about like how people are behind the scenes. Are they sharp? Are they taking care of themselves? Are they taking care of the villa? Are they cleaning up after themselves? For the most part, people are sharp. Great to see. But you always get that little bit of laziness coming sometimes, and that shows you almost like a mirror effect of their trading, where they're at life. You have to be a master of the small things before you master the large things. If you can't tidy up after yourself, if you can't do the small things well, you're not going to be able to trade, And I've seen it. I do coaching as well. And like some of the first coaching calls, I was like, there's a big disconnect between where you want to be and where you are. If you want to be a funded trader, a mil assets under management, but your actions are you're watching TV for 2 hours a day before London Open, there's like a big disconnect here. It's like there's an identity crisis. I had one client that was doing that, and I'm like, you're missing London Open, trading London overlap. You've got the right methodology, but your mindset's off. Fix it, your results will change.
So something that I found in my personal sphere right now, because this friend idea that you mentioned, I completely resonate with. And I used to feel bad of like, I feel like I'm pulling away from my friends. And then I saw a clip and it was to the effect of, don't feel bad because it's not your job to make them keep up, which was an interesting frame. but when I embraced these are the new people around me that I resonate with, let's stop trying to force old friendships to still work out. Something that I found pretty cool was I'll get someone that I respect, that I have a good relationship with, that would just text me out the blue, and it'll be like, they'll just put a question to me, and it'll be like, so what's new with you? And if they asked me that a month ago and I gave an answer, and then now they ask me again, what's new? And I give the same answer, I'll feel like I'm stagnant. I need something to say, because I know they've done 20 more things in the last month. So just that level of accountability of, if everyone's moving at this speed, I want to maintain that speed with them. And just a simple question from a friend that you look up to or respect, that's like, how is things with you? What's new with you? What are you working on that's exciting? You're accountable to that without realizing. Or I got a text from a friend to the same effect the other day. It was like, so I it's very easy to go through phases in terms of self-belief or self-esteem, of like, I'm either doing great, but then you start to think I'm doing really great when you're actually doing great. So you're getting overconfident, or you're you're not accurate in your assessment of yourself, or the other way around. You might be doing great, but you feel like you're not doing enough, and then you're under-assessing yourself. But he texted me and was like, so what's the reason you think you're not growing as fast as you should be? I was like, oh. And he was like, I'm just curious. I was like, that's an interesting question. And now I'm going to actually think, in my assessment, things might be going great, but from an outside perspective, you might be thinking, as a friend, I see you're stagnating a bit. What's the reason behind this? And now I've got to sit, assess, maybe give an answer or discuss, what do you think? But this is friendship, or these kind of friends that will hold you accountable, whether they're realizing or not. But it's to be that friend for others, and also to have those people around you. It can only benefit your own wiring, and it has been big for me as well. Getting back into the psychology portion, I want to understand more the Stoicism side of just performance, and maybe the pressure you'd feel. And I saw a cool clip of Federer, and he was basically saying how we just see him as this legend in the game, and how many Grand Slams has he won, and you just see him as a winner. And then he gave the stats of how many points he's actually won, and he had lost more points than he had won, but he ended up winning more games overall because of how the tennis math works. But the point he was trying to make is, I fail a lot and it still worked out. And then when you were mentioning here of you would put a bet on a game, it just got me thinking, a game could be like a trade, and I bet 150 quid on a game, but then each play is contributing towards that. So then I was thinking, okay, so you can either get focused in thinking each shot can be a mini game in itself, and then you get really pissed off because one shot went off, and that can now trickle into the whole game going wrong. Or you can zoom out and say, no, this is just a shot contributing towards the game, and each point doesn't matter, like the Federer analogy. But I want to hear your mindset as a snooker player, and what you learned in that from a performance perspective, and how that specifically translated towards trading psychology.
Winning's a habit. Same in trading. Even if you're just above break even, you're trying to get consistently profitable. What I always say is get into the habit of taking profit from the market. How many people do you know that are reaching for the moon? They let price pull all the way back to break even. It's like, well, it's affecting your mental capital, your physical capital. You're not gaining confidence out of that. Whereas someone else takes a 1-to-1, then a 4-to-1. They're used to winning because they see in the broker screen and it's green or it's blue. Winning's a habit as much as it is.
It's a powerful statement. Winning's a habit.
Yeah. Winning is a habit. So you get used to it. So with that, you learn to trust yourself. Self-trust is important. And then with that comes self-confidence, then builds into conviction. And when you got conviction in yourself, you will play it hard. That's the reason I took the pound yen trade and I stuck with it. Part of me wanted to close the trade when it was running nicely. Stick with it because you know where price is going to go. So it all builds into self-trust. The same reason I've always done like daily goals. It was taught to me by Mark back in the day. Always done daily goals, and it's the same process. How can you trust yourself if you're not doing what you say you're going to do? So I've always followed daily goals, tick it off, momentum, then builds into self-confidence. And when you've got that, conviction is the only step left to go. But if you're not sticking to your word, you're not going to be a good trader. You're not going to be able to win. You're not going to be a good trader, and you're going to slack in all aspects of life as well.
I've spoken to a variety of guests on the show, and a unanimous common denominator between all of them is the emphasis they put on data and actually knowing the inner workings and the insights of your edge and your performance. That's why I'm proud to bring a partner of the show, TradeZeller, the #1 journaling, backtesting, and all-in-one insights experience created by traders for traders. What TradeZeller really gives you is deep insights about your trading that would ordinarily not be visible, whether it's through understanding your your trade types and playbooks, or even insights powered by artificial intelligence through Zeller AI. Whether you trade Forex, futures, cryptos, the stock market, it all seamlessly connects to TradeZeller, so there is no additional work. You've seen me reference it dozens of times and all of the benefits I've had in my trading from the insights I found from my TradeZeller. So join myself and thousands of other viewers of the show. You'll get the best discount using the link in the description or code TOT for Titans of Tomorrow.
So it seems like a very crucial component towards trading success is your outside life, outside the markets. I mean, your overall routine and accountability to yourself. Why do you feel that is so crucial? Because I also see a lot of traders that lack all of these things and still happen to make it work out. Why do you think these are contributing factors?
Because it affects your mind. Like, I could be the best technical trader in the world, but what good is it if I'm obese, if I can't work out, if I can't have a good life, I can't travel?
So you speak more in the general image of success. It's being well-rounded.
Yeah, like, I don't want to be a successful trader and it's just like, I can't do anything else. What's the value in that? So for me, it's that. And then it also builds into self-image. How you value yourself and how you see yourself is going to be a mirror effect in the markets. The market is just reflecting. You have the external, you have the internal. If you're seeing a mirror, the market's going to print that mirror image back to you. And it's all dependent on thoughts. Based on the thoughts that you think, you will see different opportunities.
For sure. For sure.
If your belief systems are capped at, let's call it monetary wise, $1,000 a month, you're only going to be able to see in the markets what's going to make you $1,000 a month.
Yes.
Someone who's then open to then 100K a month is going to see different things based on that belief system.
I think it's down to even the internal dialogue you have. If you just believe I'm an unlucky person and then you stub your toe on the table, you'll be like, see, I am an unlucky person. And you will overlook the good that may have happened or the luck that may have happened and you'll focus on the bad. And it's just a forms of limiting belief, but it's just how you believe in things around. You mentioned here kind of identity, to put a word to it. And it's a very interesting one because when I see young people that are coming into money at the age of, let's say, 18 or something, you can see that it comes with a persona. It comes with the flexing persona. And I can see where it comes from because they've grown up seeing people like that. And they're like, I want to be like that. Then they'll do whatever it takes to get like that. And then they'll model that behavior. But usually what happens is they'll come into a small amount of money very quickly, whether it's in an agency scenario or a prop firm payout, whatever. Let's say you make a 10K payout and then you live up the image of I'm this profitable trader and you get the watch and whatever. And then maybe you go through a losing period. So this becomes an identity crisis because you've now let your friends and your family and your Instagram know that I'm this successful trader, let's say. And now you're not living that reality anymore. And it's an interesting pivot because if your identity is of, no, I got to prove it to the people around me, I am this profitable trader, I think they'll dig themselves out of the hole quite nicely. So that image is the self-identity is actually dragging them towards the right direction. And I'm curious to hear, is this anything you noticed when you kind of went all in on trading, became full-time at quite a young age, when you had this losing period around COVID? Did this identity that, no, I am this trader, help you in any way, or was it just back to the basics?
Yeah, I think originally it freaked me out. You go through a drawdown period
Yes.
and you're like, oof, this is new to me. I'd experienced it before, but when I...
We had a safety net.
Yeah, when I first reached consistency, I didn't expect it to come into a play. I thought, maybe a month or two. I didn't expect a bit more heavier drawdown in 4 months because the markets had completely changed. So yeah, holding that standard for yourself is important. That's what I'd frame it down to. If I've got a standard that I'm consistent and I'm profitable and I'm going to do anything it takes to be successful, you will raise yourself to that standard. Whereas if I've got a weak self-image and I'm not used to that success, I'm going to bring myself back down to rock bottom. So standards is really important. You've got to raise that baseline. That's really what I put it down to.
I think that's where it comes into the routine of it's your standard in all areas to bring up that baseline towards, okay, what is the image of success towards me? Are you big on journaling?
Yeah. A bit less now. It's a little bit automatic now. I still track trades, not in as much detail because I've got a lot more trades. I'm on obviously in FX plus futures. I'm taking 15, 20 trades a month sometimes.
Okay.
So depending on the month and how active it is, it becomes difficult to track everything. But earlier on, tracked every little detail. You should do trades taken, trades missed. Then I learned, stop focusing on missed trades as much. There's always going to be missed trades. So I then narrowed down into trades taken. You know, someone who always focuses on missed trades is going to get more missed trades. And there's always going to be a chase. You know, as much as there's always going to be trades that you don't take in the markets, you're never always going to be perfect. You could have held that trade longer, could have not taken that trade, could have taken another trade. There's always this chase. But then your goal is to get as close as that to that standard as you can. You know?
When you say missed trade, were you logging or considering, I was just not at the desk at the right time and I missed the whole opportunity? Or was it, I watched it play out, it was just missing, you know, it was 10 minutes outside the time window, so I didn't take it. And then you reevaluate, should I have taken it or not?
Yeah, the latter.
Okay.
The latter.
So you're basically reconsidering, well, it's FOMO actually. It's like, if only I modified the plan a bit, what would that open up for me?
Yeah.
And the domino effect of, okay, I might get one extra win here, but I might open up 4 extra losses that I'm protected from. Interesting. What is the difference between tracking performance and seeing a dip? So you're getting a drawdown period and you ascribe that towards psychology, whether it's your personal life interfering or just routine or certain standards that are slipping that is leading to a performance dip versus a strategy decay. And people can point fingers in one way or the other. How do you try and journal to find clarity in which one it is?
You got to see if it fits your model. If it fits your model and you're doing everything correct, you got to give yourself a little bit of a buffer, you know? Like if you take, let's say, 3 losing trades in a row, I'd be checking in with your journal and making sure, you know, trading plan says this is the trades that I'll take. Is there a connection there? Or have I just gone into the first stages of tilt, gone off into a whole different ball game, and then that's led to the losses? Usually it's the latter. So if you do go through drawdown, you just got to check yourself. Am I doing everything correct? If so, okay, just monitor it. If you need to reduce risk a little bit, then you obviously have that option as well. But for the most part, it's tilt. And I've obviously been through tilt a lot.
I was just going to ask, when was the last time you maybe went on tilt?
Maybe like 2-3 years ago.
Okay, quite a while.
You have phases, but what I find is that what would have been tilt in the past is now just like 2 or 3. You check yourself, you're very self-aware, you can get back dialed in quickly. That's what I usually find. Whereas 5 years ago, you might take, 8 losses and then you realize, ooh, we're through tilt now. Whereas now it's like,
you spot the signs.
2 or 3. It's like, okay, are you doing everything you need to be doing? If not, change something. And I have certain things I tailor back to daily goals before. If I go through a period of not tracking daily goals, not hitting the gym, for me, that's the first stage of the tilt as well. Cool. So it's like you check that, it's very applicable. It's not just in the market, it could be in daily life. Mm-hmm. But I guarantee you, if everything's on point, you're probably not going to go through that stage of tilt. So have an anchor in place to make sure that you're not going to go through tilt. That's key.
What are the main anchors you keep in your life outside the markets that have helped you find stability in the markets?
Daily goals, so daily schedule, the gym, eating clean.
Is the daily goals related to trading or is it just general goals?
Just general goals.
Oh, interesting.
If I slack off and, let's say someone starts scrolling on TikTok, scrolling Instagram, doesn't get their to-do list done, it's a key sign that there's a disconnect here. I used to do it in terms of the markets. I got an office, I think 1 or 2 years ago. And I said before about that full-time trader identity. I wanted to trade all day. Mm-hmm. Okay, so with that, you could have 10 goals for the day and guarantee you're not getting anything done because you're watching the markets. Mm-hmm. So it became this unproductive way of procrastination. And I realized that the end of the day comes and you're in a bit of a blur and you feel disappointed because you've taken, maybe 1-2 trades. Let's say you finish break even or even in profit for the day, but you've missed certain things, and to succeed in other aspects of life as well. Need to be in the gym, need to be on point, need to be sharp. Because otherwise it's just your technicals that are moving forward. Everything else in your life stays the same. I don't want that. So for me, tracking those little specific things allow me to see how I'm operating as a person, reflects in the markets.
I want to move on to just this idea of scale. So when you do transition towards a full-time trader and then you think, okay, I could be doing this full-time plus other things or this only full-time, which is another topic. But I think normal pursuits for traders, get as much capital as possible through funding is the primary vehicle. And then the decision thereafter is, okay, I've got good amounts of capital. Do I forever pursue more capital or do I pay myself? Do I pay it to put into a live account? Do I pay it to put into just overall investments? Talk to me about just scaling as a trader, because you are now approaching your decade mark.
Yeah, crazy thinking about that, isn't it?
So it's been a long journey, and I've been following for most of it.
Yeah, it's been a long journey. I think people should be focused on the personal account. Prop firms are great. They're obviously an incredible vehicle if you don't have any source of capital. They're obviously a test. They present a lot of different opportunities for you to scale. But as soon as you've got payouts and profit in the bank, you should be transitioning that into personal and potentially investments as well. Because once you've got a personal account, there's no rules you need to really pay attention to apart from protecting your own capital. So it becomes, once again, a power play. It becomes your golden goose. You just need to protect it. Then you can do things like withdraw a certain amount of profits from your payouts and put it into it to speed up that compound interest. Or even if it's just based on results, as long as you protect it and you pay yourself well in the markets, you can do some damage on the personal account. I love it. I'd rather do personal account than prop firms. Prop firms is just a good vehicle to really speed up that growth.
Mm-hmm. Would you have, because obviously with prop firms you can access millions of dollars in buying power across futures and FX. At what point is it even comparable? Because unless you have, if you're putting 50K into personal capital, there's no comparison in terms of what damage you can actually do. But then I'm sure it reaches a number where it's like, oh, it's a tipping point here where I could do without the prop firms. What is that number realistically?
I guess as soon as you start tipping into, half a mil, I think you're good to go at that point. You don't need any sort of prop firms. I think you just got to weigh up, even without the number, the comparison of stress. If it's worth the stress to then invest into prop firms because you do have these rules and things to pay attention to, then of course you pay attention to that. Then you reach that tipping point, whatever that number is for everyone, it's going to be different. Then you think, okay, well, do I need this stress? Probably not at this stage. Okay, let's just go full in on personal capital. I like both at this stage. Will there come a point in the future where I just focus purely on personal? For sure. Then you can obviously look into building other things like, a hedge fund or that next level of scale. Mm-hmm. But I think originally, it's a good way to do it. I think people just get so sucked into, prop firm payout, but there's a right way to do it. Mm-hmm. And then there should be a goal. Once you get funded, what are you going to do with the profits? You bank your first 10K, guarantee you 99% of people do not have a clue what they're going to do with it. Yeah. So it's like, whether you put 20% into a personal, 20% into investments, 50% into lifestyle, figure out what you're going to be doing with that payout.
Pre-decide, yeah. Because if it just lands, you'll spend it.
Yeah, and give yourself a little reward as well. That's something I always used to do. Even if, I've got a friend that he's like the most unreal,
materialistic,
like just not materialistic at all. So he'll like get a payout on like buying ice cream or like buy a pizza
to treat himself.
Yeah, and it's like you've got to reward yourself, even if it's just small, or like a restaurant or a trip. Like do something so it's less gamified, because trading for a lot of time is gamified. You see numbers on a screen, MT4, C Trader. Without that physical input of money, it becomes very much gamified.
It's also heightened with props because you have a reset button. So then you're actually playing a game where you're just weighing up, these are my evaluation costs. This is the payouts I could get. Have I broke even on my cost? Yeah, okay, I can ladder in heavy now because it's risk-free. And it's just becoming a video game / casino, which then if you transition towards personal capital, you will transition bad habits unknowingly. The reason I brought up this topic is because as a younger trader, I had a very clear vision, which every trader now has this vision, which is prop firms, payouts, live accounts, scale it to the moon. And as I've got to that point, my vision at least has changed. First of all, the vision of after that, go to a hedge fund. From my mind, at least, that's deleted. I don't know about yourself if that's still an ambition or if it's worthwhile. But the vision now has become, I think when you start to reach the stage that you're at, where it's 5 years, 7 years, 8 years, naturally, you are as a non-conformist or someone that's taken a different path and being a little bit entrepreneurial in your trading, that stays with you. So then you start to look at other ventures, because if you're doing 2 hours a day in the markets, well, you still got 22 hours. You got the resources. You can do anything, and that has become a louder and louder voice for me. So then trading has not become the sole goal anymore, which is a transition I wouldn't have forecasted. Secondarily, is the reason I asked about the number is because I thought it was just grow more and more. If I have 20 million to play with, 2% equals this. Well, why not have 50 million? Like you just do that maths game thing. What I've actually done this year, which is, I just want to throw it to you as a thought and idea. I realized, let's just call it $1 million in a trading account. The lot sizes I would take and I'm only taking one trade at a single time. I'll never be in two trades at the same time, and I wouldn't be swing trading. So I was not utilizing 90% of the margin. It's dead money. And then when I started to realize it is dead money, where I'm never taking a lot size where 50% of my account is being used in terms of buying power. I was like, what if I just keep 10% of the account and pull out 90% and just put it in the S&P? Because now I know this is going to make me, let's call it 10% a year, and I still have access to it. So I'm not over leveraging. But now instead of doing 1% risk, I'm doing 10% risk on what's left, but still 1% of the overall. So when I realized as an individual, I'm not over leveraging, but maybe it looks like I am. But the benefit here is it's not dead money anymore. So when I see after the tariff situation, this rocket, it bought me a lot of peace. It bought me this ability to not chase the market at all, and it improved my trading. And I also made money without doing anything through the passive investments. So then it got me thinking, maybe the goal is not to just infinitely grow an account, it's just to maintain a sufficient lot size and then make sure you have it in safe, liquid places. And that's kind of how I've navigated this year. I want to hear your thoughts on all of that.
Yeah, capital partitioning is something I've done for years.
Cool,
I don't do 10% in the account, I do 50. So once again, it gives you a lot of buying power. But
where did you hear about this from? I wish someone had told me this a long time ago.
This was in the Falcon days. One of the coaches told me about it, and I paid attention to it. Of course, I had a live account at the time, started executing it, and realized the power of it. You don't need all your money in the broker account. Why would you?
And it's a risk. If you're doing FX, you're probably with an unregulated broker to access the leverage. It just gets uneasy at a certain point.
And like you said, even if you're just using 10% of the margin, you don't need all of it in place. You just have to sit with, okay, this is really like 5% of my account, but it's not really because my capital's elsewhere.
Yes.
As long as you can sit with that, you're good to go. So I think it's the best play for capital. And you are right. As soon as you get to a certain stage, you do start to think about putting your eggs in different baskets.
What have you tend to have done with the capital partitioning? Is it just been in an index, or where did you put it?
Index, bank account, lifestyle. Those three, really.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and Ninja Trader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader.
What do you mean by lifestyle?
Just kind of like tailor into, how I want to live my life, or expenses plus holidays, etc.
Okay, I said not as an investment portion, but just how you partition profits. It will go towards these buckets.
Exactly.
Got it.
Exactly. It's a power play. It's really a good.
Yeah, I mean, I truly wish someone had mentioned it to me earlier. And now that I've experienced it, I've seen how powerful it has been for my trading, my overall net worth, and just diversification. I was like, I wish I thought of this sooner, and therefore happily share it. As we come towards the end portion of the podcast, because you've had a almost decade-long career and you've navigated through the wild west that social media is in the trading space, and through that it's probably been to your benefit in a lot of ways, to learn a lot, but also maybe to your downfall in certain ways of the lifestyle things you see online, and then maybe comparing yourself in the early days and so forth. I want to hear your thoughts on social media and trading, and advice to new traders navigating social media and trading.
If I was doing it again, probably wouldn't do it in the earlier stages, but then you can look at it both ways and say, well, I documented everything. I think if there's a purpose behind it, like for me, it was to document, build a personal brand, and now I've got that, and it's been great to look back on. Now someone comes into the market, looks at me 10 years deep, and is like, okay, well, you can see the entire journey. So it proves as an asset, really, when you grow. I think I could have sped things up a little bit if I was just purely focused on trading. So you can bring in the time aspect of things. I think I could have done it sooner. However, as a longer term play, I think it's great. It becomes almost like a journal. I don't do it as much anymore. It's probably cool to look back on as well. Yeah, I don't do it as much anymore. I think my older videos are pretty cringy sometimes, but it's also cool to see how far I've grown, So if I look back and see mini Michael, in his little office with his first camera. It's like kind of cool to see where things started. So, when I grow up and have kids, it's like you can show them the journey to success.
Yeah.
So when I was younger, I always used to think about my 18-year-old self, but then my 40-year-old self. I want to make both of those people proud.
That's cool. Yeah, I like that.
So when I have kids and stuff, it's like, well, this is who your dad was. This is who he was when he first started. This is the same journey you're going to have to get to if you want to do the same thing, just with more wisdom and knowledge from me, I guess. So I've always done it from a journaling aspect, but I love the personal brand aspect as well. And trading I see as the masculine side of me. It's very logical for the most part. Filming, it's very creative. So it satisfies both aspects of me. So I feel very satisfied doing both. And then that leads into obviously now having Envision as well, teaching other people. Once again, very creative. So it fulfills both sides.
It's fulfillment, yeah, and just overall impact. What I also wanted to hear was someone that is navigating when you have thousands of mentors and conflicting advice, and it can seem like a lot, and it's very easy to fall into he has a nice car, so he must be a reliable source of information, which is a very novice mindset which we could look at, but I remember being there and actually thinking like that, and you can fall into that position very easily. How would you navigate that for a viewer that's maybe year one or year two in their journey?
It's a good question. It's probably the most important question is, who do you listen to? People who have what you want or who've been where you are. But the truth of the matter is, don't get caught up in that flexy environment to say, oh, he's got a car, he must be doing well. Because a lot of the time that could be from like memberships, or it could be from the course or whatever they've got. So you've got to really pay attention to the individual. What quality do they have? How much passion do they have towards mastery of the craft? Do they really teach, and do they really actually execute what they teach? If they do, let's say, we trade the same way that we teach, it's usually a good time. Whereas someone who's just like focused so much on lifestyle that it's like, well, do they really trade? You've got to ask those questions. So I prefer someone who's a bit more subtle. Look at myself. I would say for the most part, I'm very subtle. I feel like I live a decent life. I go traveling all the time, but I'm not trying to like flex certain things.
In people's faces.
I'm just being myself. I think as long as you are yourself and it's not coming across in the wrong manner, then it builds trust, and that's really what you want.
I want to try something. So I want to end the episode just by throwing a word, and I want to hear your description of it. And the word, because I feel like it's been an undertone throughout with the various topics. And the word that's coming to me for this episode is just mastery.
I knew you were going to ask that.
How would you describe or position that word mastery in the sense of trading?
Paying attention to the small things, not just having a mechanical strategy and saying, oh, you know what, I'm good to go. Or creating some AI stuff that trades for you and saying, I'm good to go. It's the passion for the journey, being able to withstand the ebbs and flows and pay attention to the small layers that go. It's not just one layer. It's like an onion, I guess you could say, to use that as an analogy. You got to go a lot deeper. You look at someone, I've always respected Michael Jordan, Kobe Bryant. You look at how much attention to detail they had on their craft of mastery. It's really apparent. So what would have been a 2% tweak 10 years ago, now to make improvements, it's like a 0.1% adjustment to then improve. So following along that path is mastery. It's the pursuit of mastery. Do you ever get there? No, I don't think you do. I think as soon as you feel like you've got to mastery, you're dropping off,
So it's in pursuit. Mastery is in pursuit.
It's in pursuit of excellence, yeah. Whenever a top tennis player gets to a point where they think, okay, I've made it, they're probably going to drop off, start, relaxing a lot more. You've got to always be in pursuit of something. You see with heavyweight fighters, I think Tyson Fury had the same thing. Reached the heavyweight title, then went on a massive tilt cycle, and obviously in his own journey, you need to always be working on the next thing to better the skill set. And I think you've got to stop focusing on the things that will create a side effect, such as funding. Funding's just a side effect of mastery. Once you get to a certain point, funding will become the next byproduct. So focus on the skill set, focus on the process. It's really where the enjoyment is,
And it's interesting, you kind of connected it towards your masculine state. I think the real reason why 95% of traders are men is because on pursuit of mastery and chasing a very high, a very difficult goal, I think in the chase is where you are in your masculine frame. And I think that pursuit of mastery is a masculine essence, and it's not in the destination. It's in the pursuit of. It's in the chase, which is why I call the show title Tomorrow. I think there's always a tomorrow, no matter where you are in your journey. Probably a nice way to end, actually, with the name of the show. But Michael, thank you very much for for coming on. I always want to give the opportunity. So if you wanna give some final piece of advice or something impactful from your almost decade-long journey.
I think touching on the aspect of mastery, like just make sure that you're doing it for the right reasons, and don't think that trading's going to happen in, 5 months, 10 months. It's going to take a little bit of time. It's understanding that results can come quickly, but you need to get to that foundational state first, but I won't be focused so much on 20 grand payout, or, I want so much funded accounts. Just focus on the skill set. Everything else will come secondary. I think it's important to have that funding aspect or personal account growth in your mind, but don't have it as the be all and end all. You've got to enjoy what you do. You got to wake up and, okay, I have a freedom life. I enjoy what I do. I love working in the pursuit of mastery. Get the enjoyment from that, and then just keep raising your baseline. Don't get in a rut. I've had it before where you're trading in one environment. You're seeing the same 4 walls every day. Time passes like that. So that's why I work from different coffee shops, mix up the environment, go work in a restaurant around a lot more wealthy people, for example. Switch up your environment as much as you can, because then different thoughts will impact you. And then
Neuroplasticity,
those thoughts will then inspire a different set of actions, which will take you to higher results. So always focus on raising your baseline and your standards along the journey of success, and just do the little things very well. You might, like we said before, cleaning the house, feeding the mind, focusing on your gym routine, all that stuff matters. Focus on that.
Beautiful stuff, bro. Michael, thank you very much for joining, and a wonderful episode.
Thank you very much.
There we go. There we go. A pleasure, bro. Nice stuff, man. Nice stuff.
Thank you, bro.